Next up, let's talk about Bollinger Bands. So the Bollinger Band indicator is designed to showcase how prices can fluctuate around an average value. It can help users identify volatile market scenarios and overbought or oversold conditions of an asset's price. There are three lines that make up Bollinger Bands: a simple moving average price of price action in the middle. There are three lines that make up Bollinger Bands: a simple moving average of price action found in the middle, an upper band, and a lower band. Here's what Bollinger Bands look like in action. So this is the Ethereum to US dollar chart. This is the 2-hour chart on Coinbase. And as we can see, here is our upper band. This is the top blue line. The middle line, this is an orange. This is the 20 period simple moving average, which is just an average of the previous 20 bars before the current bar. So if we're looking at this particular bar and where the SMA, the simple moving average, is, it just takes an average of all the prices, all the bars before the closing price of all the bars before it, and calculates it into an average and creates a line that tracks that average. So instead of having to track all these different candlesticks, we can now look at a smoothed out average line. And then that is followed by the lower band. Now here's how Bollinger Bands are calculated. These bands are typically set up so that the middle line is a 20-day simple moving average, SMA, based on the select asset's prices. This can be altered. All the settings can be altered, and the calculations and inputs can be altered, but traditionally, most people use a 20-day simple moving average. The upper and lower bands are based on a standard deviation of this SMA, which is just calculations based on market volatility. They are typically 2 standard deviations above and below the simple moving average. As a result, when volatility is high, the outer bands will expand and move away from the middle line, whereas they will move closer to the middle band when volatility is low. So when price is moving to extreme heights or moving to extreme lows beyond that simple moving average, the outer bands will expand, and when price is consolidating and is really staying within a tight range, it'll be closer to the middle band. Now here's the calculation of the Bollinger Bands and how the various inputs are used and how these lines are calculated and then placed upon your chart. Now, it's not too important to know how it's calculated, but for those of you who are interested in how these indicators are created and where they're basing their information off of and how it's being formulated, this is the calculation for how the upper Bollinger Bands and the lower Bollinger Bands are created. Now, what's interesting and useful about Bollinger Bands is that the different shapes and patterns found with how the upper and lower bands contract and expand can help indicate what's going to happen next in that asset. Typically, we see narrowing bands indicate that we're in a period of reduced volatility. As you can see here, the bands are starting to tighten up in comparison to over here, where there is a dramatic move to the upside and the bands are starting to spread apart, move away from each other. We saw the same here, where the upper band is moving upwards as price is moving up. Essentially, market average prices are moving up as well, and the lower band is following as well, but for a period of time there was a period of expanded movement. Bands widening indicate increased volatility. This could be to the upside and also to the downside. Here we see an extremely wide Bollinger Band extension where the bottom Bollinger Band is really separating away from the simple moving average and the top band as well. So Bollinger Bands provide a lens to view price movement and fluctuations based on averages. If the price moves above the moving average and passes the upper band, it can be interpreted that the market is overbought and possibly overextended. If the price touches the upper band many times, it could signify a level of resistance or a meaningful supply zone or demand zone where price is not extending beyond. Now, if the price moves below the moving average and below the lower band, it can signify the market is below value or oversold. If the price touches the lower band several times, it could signify a level support or a support zone where price will have more support and will have a much harder time falling below. These conditions can help traders identify buy or sell targets, buying when the price reaches the lower band and selling when the price reaches the higher band. This is the basic idea behind Bollinger Bands, but there's a little bit more to it. We'll dive into that in just a second. Now here we see chain link to the US dollar. This is the 1 hour chart on Coinbase. There's a couple of key moments we want to take a look at with this price action in regards to how the Bollinger Bands are reacting to Chainlink's price movement. So here we see price bounces from band to band. This is a period of consolidation. Not only is the price bouncing from band to band in a fairly tight range, we're also seeing the bands contract and start to really come together and provide this sense of a channel. And this is really different compared to these other periods where we see more volatility, more extreme price movement from, let's say, from $28 to $31, or vice versa, to the way down or the way up, or this particular extreme drop from $34 to about $28. Here we see extreme extension with the Bollinger Bands. Here we see the price falls through the lower band, indicating extreme sell-off and market volatility. Now the bands will tighten and then broaden as price fluctuates, and we'll see this constantly swing back and forth between periods of constriction or tightening of the Bollinger Bands and periods of extension where the Bollinger Bands are moving away from each other, representing market volatility and market motion. Here's another example. This is Bitcoin to the US dollar. This is on Bitfinex, and this was observed in late 2017, early 2018. So this was the 2017-2018 Bitcoin market cycle top, this extreme valuation where Bitcoin just reached about 19,000. In late November, we see Bitcoin overall hugging the top part of the Bollinger Band. Overall, really pushing upwards, and we see multiple instances of Bitcoin coming down possibly to the simple moving average and using it as a level of support. We see it here right in late October going into mid-November. The price did come below it. There was a bit of a fight, as we see here. It took multiple bars to really break below the simple moving average. As price came down to the bottom Bollinger Band, it quickly would bounce past it and would break past the simple moving average once again to continue this upward trend, this extreme upward trend. We also see it here. Price did try to come down relatively close to the simple moving average, but was reversed back to the upside. And then finally, as price reach these new highs, it would come falling down. We do see overall bounces off of the lower Bollinger Bands observed in late December, but then ultimately rejections at the simple moving average seen here in late December and also in early January. We're also seeing here, it's important to note, the lower lows, one observed in late December and then also another observed in mid-January. The price is overall trending downwards, resulting following this peak in the market cycle. And from here, we do see several bounces, breaches below the lower Bollinger Bands, and then eventual recoveries. But as price would near the moving average, we see multiple rejections of the moving average, where this essentially functions as a moving level of resistance, a top of the range, so to speak. We see it observed here once again here as well. This is a second time. Here's a third time as well before bottoming out for now around 6,000 in early February. We do see a break past the simple moving average, but the failure to tag the Bollinger Band and really not only touch it here, but also close with a significant candle close above the Bollinger Band to provide more weight to a market movement to the upside. We do see the eventual fall, a hold at the simple moving average, and then once again another failure to have a meaningful close above the moving average and then above the top Bollinger Band, and then price being rejected to the downside further. So the expansion and contraction of Bollinger Bands can also be used to anticipate or predict periods of high or low market volatility. Bands move away from the middle line when the price action becomes more volatile. This could be large price swings where the bands expand. Now, bands moving inwards towards the middle line when the price action becomes less volatile and stable. This indicates little to no price movement and generally a sideways market, a consolidating period for the asset. Now, some may assume when the bands are overexpanded during volatile markets that the current trend may soon be entering a consolidation or a reversal. So here are some various examples of what this may look like on a live chart. So here is the Bitcoin, the US dollar. This is the 4-hour chart where each one of these candles represents 4 hours of price movement in the market. On the Bitcoin market is on Coinbase. So here we see a Bollinger Band contraction. This is a period of consolidation. We're starting to see a price really settle, much less volatile swings as opposed to other periods shown in this chart and other periods that we have previously seen. Price action above the signal line, the moving average. This indicates a bullish trend or possible reversal to the upside depending on where the market was coming from. Overall, before we see lower highs, lower lows overall, and this is an indication of a downtrend. Here we're starting to see indication of a possible reversal to the upside. Here we see this break past when we see a bullish uptrend that is now confirmed. This was our first hint towards that, this break past the signal line, the SMA, and now we're seeing an eventual bullish uptrend, higher highs observed here, and overall higher lows. During these periods of uptrends and also downtrends as well, we're also seeing the Bollinger Bands expand. This is an indication of volatility and overall price movement, increased price change, price volatility. At this point, Bitcoin raised from a low of about 46,000 to a high of about 54,000. So this is a generally a pretty big price movement within the span of really 5 days from October 6th to October 11th, give or take. This would continue, and this pattern between Bollinger Band expansion and contraction can be observed. Here we see the upper Bollinger Band, this top blue line. This is our resistance level, and the lower Bollinger Band acts as our support level generally throughout the many trend changes. Here we see the price action fall below the simple moving average, the signal line, and this is an indication of a bearish trend where now we're seeing this widening of the Bollinger Bands and an overall rejection from the top Bollinger Band resistance level. We're failing to see significant candle closes above that. We're seeing just general touches. The Bollinger Bands are expanding, but generally price is failing to reach that. So now we're starting to see a rejection to the downside. And now we're starting to see a bearish trend established from these highs. And this is once this is really hinted towards from the price action falling below the signal line, and then generally failing to close and push past this upper Bollinger Band in a meaningful way. And here we see a great instance of the contraction of the Bollinger Bands or consolidation period. And here we really see Bitcoin's price action from about late November into early December really stagnant and holding and consolidating within the 58 to 56,000 period. The bands are really tightening up, especially particularly here, before eventually expanding, as we see here, and in conjunction with the dramatic price fall. Now, one of the most popular ways to use the Bollinger Bands and one of the most popular strategies is looking out for the Bollinger Band squeeze. So while expanded bands may precede and indicate consolidation periods or reversals, narrowing Bollinger Bands may precede and indicate a potential breakout or a period of volatility. During sideways markets, the bands narrow in relation to the simple moving average line in the middle. These periods of price consolidation may precede large breakouts as volatility, volume, and momentum increase. Some traders utilize a strategy known as the Bollinger Band squeeze, which basically involves using periods of low volatility, these narrowing bands, these constricting bands, to identify potential breakouts or moments where the market is going to make a big move. It is important to note, though, that this strategy does not indicate if the breakout will be to the upside or downside. It doesn't tell you what direction the market will move. So it's important to look at additional factors, additional indications, or methods of technical analysis to guide your decision. Here's an example of Bitcoin to the US dollar on the 1 hour chart. Each one of these candles represents 1 hour. And here are some periods, indications of Bollinger Bands narrowing and preceding market volatility. Here is a great example. This is in late November of a very dramatic period where the bands came from this expanded range and overall price dumped from maybe about 58,000 to about 53, give or take. Following this big move, we see these expanded bands now following conjunction with this consolidating price range, and we see the Bollinger Bands narrowing, really constricting. This is a really tight formation of the Bollinger Bands in comparison to where it came from. So this is an indication that, hey, something is going to happen. This does not continue on forever. The ebb and flow of the Bollinger Bands really goes back and forth between expansion and constriction or narrowing. Moving from this constricting period, we see price does in fact come back up from a low of about 52,000 all the way back to about 58. And we see the Bollinger Bands react to this overall expansion. Bollinger Bands continue to consolidate around 56,000, and a really dramatic tightening observed in early December, right before the big dump on December 4th. This huge expansion of the Bollinger Bands. This is a pretty dramatic expansion between them, and also a dramatic fall in price from about 57,000, give or take, to 42,000, really falling way below the lower Bollinger Band. For some people, price falling below the Bollinger Band in a really dramatic manner like this quickly as well. This really just happened in one candle. This is an indication of a potential buying situation. Usually the price really falling below the Bollinger Band in such a dramatic fashion, so quickly, and with such extreme force, that's usually a sign that the market will return back to its middle. Essentially, there's no way that the market will come down that low and remain there that low. Usually there's a bounce from these dramatic falls, and this is another sign to look out for all right, well, where could price go? So we see overall the Bollinger Band would be around here, is observed around here, around 48. Really anywhere below this level could have been seen as a buy, right? Yeah, around 46 all the way down to 42. This could have been seen as a buy. You know, the thing is, at the time, nobody knows when the price will bottom out or where the bottom is. There's just a couple levels, price levels. If you use this in conjunction with other analysis tools such as support and resistance, you could kind of guesstimate different ranges of where Bitcoin could bottom out. One could say maybe around 47, which we do see here. We do see a significant period of consolidation here before bouncing up to higher periods of maybe just about 52,000. Below 47,000 though would be about 42. This is historically an important pivot point. Using technical analysis, looking at the Bitcoin chart, we do see that 42,000 is an important period. And the fact that it dropped below the Bollinger Band so dramatically, so quickly, could have indicated like, hey, this is a potentially great entry position for a long. Here are some more examples, not only to the downside, but to the upside, where the Bollinger Bands narrow before extreme movements. So here is a great example. The Bollinger Bands they're coming from this extended period and tightening, really extreme constriction seen here. Price does fall down below, but does fall below the lower Bollinger Band. We do see a increase to the upper Bollinger Band, and then a rejection from the simple moving average, and then an increase to the upside as seen here. We do see another period of Bollinger Bands narrowing. This is generally a consolidation phase for Bitcoin before a big move, and if used in conjunction with other technical analysis indicators such as volume, support and resistance levels, we could have assumed that, hey, this is a great opportunity to maybe place a long, to enter a trade and see if Bitcoin were to continue to the upside. In this case, it did. And also here as well, this is another great opportunity. Bollinger Bands are narrowing. These constricting periods precede large moves either to the upside or the downside. Here we see it preceding an uptrend, a movement to the upside. Now there are some downsides to Bollinger Bands. Bollinger Bands should not be used solely on their own, as it does not factor in a number of metrics such as volume and momentum. It also doesn't factor in support and resistance as well. You typically do not want to buy at the top of a price range. So let's say if Bitcoin is ranging between, let's say 53 and 58,000. Typically, you don't want to buy at the top of that range when it's nearing a possible resistance level. And Bollinger Bands may not always accurately represent that with their band formation. Using Bollinger Bands to predict buy or sell opportunities may be misleading as well, as during a downtrend, the price may continue to go lower even if the bands indicate an oversold condition. That's why using that example before, we saw Bitcoin fall to 42,000, just because the price fell below the lower Bollinger Band does not always indicate that that is the clear bottom, or that is the clear buying opportunity. Likewise, an inexperienced trader may see prices climb higher to the upper band, thinking that, oh, that's the top, let me sell, and that could completely force them to lose money on that trade, and essentially they would miss the volume and other indications that the trend would continue to the upside or to the downside. Really, just because the band touches the top band does not necessarily mean it's not going to continue moving in that direction. Likewise to the downside, just because if we're in a downtrend and the price comes down to the lower Bollinger Band, there's no guarantee that the price won't continue trending in that direction, that is an actual top or an actual bottom. And it's important to look at other indications to support that theory. Finally, it is best to use Bollinger Bands in conjunction with other indicators and analysis methods such as support and resistance identification to fine-tune trade entries and exits. It's really best to have an understanding of supply and demand zones. Once again, support and resistance is not just one line, it's more of a range or a zone to observe and to analyze and view the market with. In conjunction with that, we also want to use volume as well. There's other indicators you can use as well, such as the RSI or maybe the MFI as well, to analyze what the asset is doing, but it's important to use them in combination with Bollinger Bands. Don't rely on Bollinger Bands on their own to tell you when to enter or exit a trade.